If you died tomorrow, could your family keep the house, pay for college, and maintain their lifestyle for the next 15 to 20 years on what you have right now? Most people in Minnesota answer no to that question. And most people are carrying way too little life insurance to fix it. The average person I see in my agency has about 300 to 500,000 in coverage. When I walk them through the actual math, they need closer to a million or more. That gap is costing families their financial security. By the end of this video, you'll know exactly how much coverage you actually need using the method financial planners use every single day. Here's how it works. You take four numbers and add them together. First, your total debt outside the house, car loans, credit cards, student loans, everything. Second, your annual income times 12 to 15 years. That's income replacement. If you make 75,000 a year, that's $900,000 your family needs to replace. Third, your remaining mortgage balance. In the Twin Cities metro, that median home is 350,000, so that number matters. Fourth, college costs for your kids. If you have two kids, you're looking at 160,000, maybe more with inflation. Add those four numbers together. Let's say they total 1.39 million. You subtract whatever savings you already have, and that's your target. Most people I talk to in Fridley, in Minneapolis, all over the metro, they're carrying employer group life insurance. That's usually 1 to 2 times their salary. 50, 75, maybe $150,000. That covers the funeral and maybe 3 months of bills. It does not replace 2 decades of income. And if you've got a stay-at-home spouse, that person has zero coverage. That's another problem. The economic value of childcare, household management, all of that, it's real money. 50 to 80,000 a year in real money for most families with a mortgage and kids. 20 or 30 year term policy is exactly what you need. Term is affordable. You get coverage for the years when your family actually depends on your income. You need separate policies on both spouses, even the non-income earning one. And the coverage amount should match your dime calculation, not some industry rule of thumb that doesn't know your life. Here's what I see all the time. People think the goal is to pay off the mortgage. That's part of it, but it's not the whole picture. Paying off the house is good, but your family still needs to eat. They need utilities. They need to fund retirement for themselves. They need to send kids to the University of Minnesota or wherever. If you only cover the mortgage payoff, you've solved one problem and left 5 others unsolved. The family ends up selling the house anyway in 5 years because they can't afford to keep it without your income. Here's what I want you to do. Answer this question honestly. If I died tomorrow, could my family maintain their current standard of living for the next 15 to 20 years? If the answer is no, you need more coverage. Call us right now at 763-733-7475. We're licensed in Minnesota, Wisconsin, North Dakota.